All right, everyone, welcome. Today, we're jumping right into a crypto market that is being pulled in two completely different directions. On one hand, you've got some absolutely game-changing news from big institutions. And on the other, there's this building storm of economic fear that's got everybody on edge. So get this, Bitcoin is just sitting there. It's trading flat around $108,900, and money is actually flowing out of its ETFs. But at the same exact time, a Wall Street giant just filed something that could totally change the game and kick off a brand new season for altcoins. So the big question is Bitcoin's time in the spotlight finally coming to an end? Okay, so let's really dig into this because this is hands down the biggest news of the day. What this tells us is that the crypto story is just not about Bitcoin anymore. We are seeing the big money, the serious institutional players, publicly and officially looking beyond Bitcoin for the first time in a really major way. That number you're seeing, that's $1.8 trillion. That's the amount of money that T. Rowe Price manages. And look, for anyone who doesn't know, this isn't some flashy crypto fund. These guys are a true heavyweight in traditional finance, the kind of firm your parents trust with their retirement. Them getting involved, that adds a whole new level of legitimacy to this space. And this is where it gets really, really interesting. Take a look at this filing. It's not just Bitcoin and Ethereum, which we'd expect. For the first time ever, a major US firm is including Solana and XRP in an ETF. This isn't just a rumor. This is them building a regulated official highway for potentially trillions of dollars to flow directly into these specific altcoins. And that right there perfectly sums up the massive change in thinking we're witnessing. It confirms that these well-known altcoins aren't just seen as speculative long shots anymore. Traditional finance is now starting to view them as the next potential blue-chip investments, right up there with Bitcoin and Ethereum. But while this whole altcoin story is getting super exciting, Bitcoin itself is telling a completely different, much colder story. There's this undeniable lack of enthusiasm from the very institutions that were supposed to be pushing its price to the moon. And this number, well, it says it all. In just the last 24 hours, those much-hyped Bitcoin spot ETFs saw net outflow of over $120 million. That means more money is leaving than coming in. So now you've got market analysts starting to sound the alarm. They're warning that this apathy, this lack of interest from institutions, is putting some serious pressure on Bitcoin's price. It's really struggling to hold that 108K mark, and the risk of it dropping below that huge psychological level of $100,000 is becoming very real. So what you're seeing is this really sharp contrast. You've got Bitcoin on one side, just kind of stagnating with money flowing out. And then on the other side, you have Ethereum showing some real strength, trading more positively. And why? Because it's being bought up by firms like Quantum Solutions, which, by the way, is backed by the big innovation fund ARK Invest. Now, we need to zoom out for a second because this internal fight between Bitcoin and the alts is happening right as a major storm is gathering on the horizon. And this isn't just about crypto. These are powerful external forces that could affect everyone. Right now, the market is getting hit from three different directions. First, you've got just general economic fear, talk of a U.S. government shutdown, and a ton of anxiety about tomorrow's big inflation report. Then, you've still got major security problems, like that recent $8.4 million hack of the Bunni DEX, a painful reminder that DeFi is still a risky playground. And finally, regulators are getting tougher, handing out huge fines and making it clear they're watching closely. So with all these conflicting forces pushing and pulling, what does this actually mean for you and me? Well, let's break down the three most important things everyone should have on their dashboard for the next 24 hours. First up is Bitcoin dominance, or BTC.D. The easiest way to think about this is its Bitcoin slice of the entire crypto market pie. Right now, as you can see, that slice is about 58%. Now, if that starts to shrink because all this new money is flowing into those new altcoin ETFs, well, that's the classic signal that the altcoin season everyone's been waiting for could finally be here. Second, you gotta look at the market's mood. The Fear and Greed Index is sitting at 27, which is deep in fear territory. This tells you just how much anxiety and caution is out there right now, with everyone basically holding their breath for tomorrow's inflation numbers. And third, you have to keep an eye on these daily ETF flows. This isn't just a one-day thing. If we keep seeing money flowing out like this day after day, it's going to act like an anchor, almost certainly pulling Bitcoin's price down toward those lower support levels. Okay, so let's bring this all home. With this massive tug of war happening between institutional hope and macro fear, what's the actual game plan? Here's a really clear, simple strategy to help manage your risk before things get potentially wild tomorrow.
The strategy here is all about playing defense. Rule number 1, avoid high leverage. That's trading with borrowed money. Tomorrow is absolutely not the day for that, because a bad inflation number could wipe out a lot of people. Second, if you're holding tokens like COAI or HYPE that have been flying high, protect those profits. Set a tight stop loss. That's just an automatic order to sell if the price dips. And third, just be patient. Tomorrow's inflation data is the main event. Let the numbers come out, see how the market reacts, and then decide on your next big move.
We are truly at an inflection point. The next 24 hours are going to be absolutely critical. They're going to give us a massive clue as to which of these powerful stories, the long-term institutional adoption or the short-term economic fear, is going to win out and define the market's next big move.